Position trading is a long-term investment strategy where traders hold positions for extended periods, ranging from weeks to years. It aims to capitalize on overall market trends and fundamental developments, rather than short-term price fluctuations. In today's video, we will explore the benefits of position trading. With a focus on patience, discipline, and thorough research, position trading offers the potential for substantial profits, while minimizing stress and transaction costs. Now let me ask you, have you ever wondered why some investors make money in the financial markets all the time, while others feel stressed and unsure? Well, it's because of a smart strategy called position trading. This simple and effective approach helps reduce stress and increase your chances of making profits. Imagine if I shared with you a powerful way to trade that can make you less stressed, save you money on transactions, and possibly bring you impressive profits in the long run. Sounds interesting, right? Well, get ready to unlock the secret behind the success of position trading. By the end of this video, you'll have a clear understanding of why position trading has been trusted by seasoned investors for generations. 1. Understanding position trading. Imagine a trading approach that doesn't demand constant monitoring, allowing you to avoid the stress and pressure that often accompanies short-term trading. Well, that's precisely what position trading offers. Before we start talking about position trading, let me ask you something. What if there's a trading approach that can potentially lead to remarkable long-term gains while minimizing stress and transaction costs? Position trading is a long-term trading strategy that aims to capitalize on substantial price movements over an extended period. Unlike day trading or swing trading, position traders hold their positions for weeks, months, or even years, depending on their analysis and market outlook. The core principle behind position trading is to identify major trends and ride them for significant gains. Traders often employ fundamental analysis and macroeconomic factors to determine the overall direction of an asset or market. Position trading requires a patient and disciplined approach, as it involves enduring short-term price fluctuations while maintaining a focus on the broader market trend. 2. Advantages of position trading. Imagine stepping into a world of trading where calmness reigns supreme and emotions take a back seat. That's the beauty of position trading, a strategy that shields you from the chaotic ups and downs of short-term trading, sparing you the stress and anxiety that often lead to emotional decisions. By holding on to your positions for extended periods, you not only save on transaction costs but also gain the power of patience and discipline. It's like catching a ride on the back of fundamental trends in economic cycles, propelling you towards the horizon of long-term price movements. With position trading, you can trade with a clear mind and a steady hand, capitalizing on the potential for significant profits while embracing the tranquility of a more stable and rewarding trading experience. 3. Identifying suitable assets. Identifying suitable assets is a crucial step in building a successful investment or trading portfolio. The process involves thorough research and analysis to find assets that align with your financial goals, risk tolerance, and time horizon. Various factors come into play when determining asset suitability, including the asset's historical performance, liquidity, volatility, and correlation with other assets in your portfolio. Additionally, considering macroeconomic trends, industry-specific developments, and geopolitical events can help gauge the potential future performance of the asset. Different assets, such as stocks, bonds, commodities, currencies, and real estate, carry distinct characteristics and risks, so diversifying across multiple asset classes can help mitigate overall portfolio risk. Careful evaluation of an asset's fundamentals, technical indicators, and valuation metrics can aid in making informed decisions. 4. Conducting thorough research. In position trading, doing research is like having a special guide that helps you succeed. What if I told you that understanding a company's financial health, advantages over competitors, and growth potential can unlock its hidden value? Yes, in position trading, doing detailed fundamental analysis is super important. By understanding a company's finances, you can see how strong and stable it is. Knowing its competitive advantages can help you find assets that can do better than others in the long term. And think about how finding growth potential can lead you to hidden treasures that can grow in the future. But we don't stop there. We look at the bigger picture too. We consider factors like how the economy, world events, and industry trends can affect investments. These external factors can push your investments forward or challenge you to make clever moves. 5. Setting entry and exit criteria. Setting entry and exit criteria is a fundamental aspect of any trading or investment strategy. Entry criteria define the conditions that need to be met before initiating a trade or purchasing an asset. These criteria typically include technical indicators, chart patterns, or fundamental factors that signal a favorable entry point. Traders may consider indicators like moving averages, RSI, or MACD, or they may wait for a specific chart pattern like a breakout or a pullback to a key support level. On the other hand, exit criteria dictate when to close a trade or sell an asset to lock in profits or limit losses. This can be determined by setting price targets, using trailing stop-loss orders, or reacting to specific events or developments in the market. A well-defined and disciplined approach to setting entry and exit criteria is essential to remain objective and avoid emotional decision-making, helping traders and investors make sound decisions based on their predetermined strategies and risk tolerance. 6. Risk management. Managing risk is crucial in position trading because it involves holding onto investments for a long time. Position traders need to be careful about potential market changes that could affect their positions. Good risk management means using strategies to protect their money and reduce possible losses. One important part of risk management is deciding how much of their total portfolio to invest in each position, so no single trade can hurt their entire account too much. Setting stop-loss orders is also important. It's like a safety net to stop losses if the market goes against them. Diversifying their investments across different assets and markets can help spread the risk and lessen the impact of bad price changes in one asset. 7. Practicing patience. Practicing patience is a valuable trait in both life and various endeavors. In our fast-paced world, it is easy to get caught up in the desire for immediate results. But learning to be patient can lead to more thoughtful and successful outcomes. Whether it's in personal relationships, pursuing goals, or making financial decisions, patience allows us to endure challenges, navigate uncertainties, and make well-considered choices. By giving things time to unfold and resisting impulsive actions, we can develop a clearer perspective and make more informed judgments. Patience empowers us to persevere through difficulties, embrace learning opportunities, and savor the journey towards our aspirations. Ultimately, practicing patience can lead to a more content and fulfilling life. 8. Reviewing and adapting. In position trading, being proactive is like having a compass that keeps you on the right path. Imagine yourself as a vigilant captain, regularly checking your positions and portfolio performance. But here's the key. Are you ready to stay updated with market changes and adjust your strategy accordingly? Reviewing and adapting are essential practices for personal growth and success. Regularly taking the time to review our actions, decisions, and progress allows us to gain valuable insights into what works well and what needs improvement. By reflecting on past experiences, we can identify patterns, strengths, and areas for development. This introspection enables us to adapt our strategies, approaches, and goals to align with our evolving circumstances and aspirations. Flexibility and openness to change are vital traits as we learn from our experiences and make necessary adjustments to stay on the path of progress. 9. Real-life case studies. Real-life case studies are like real examples that help us understand how things work in different areas. They show us what worked well, what didn't, and what challenges people or companies faced in specific situations. By looking at these real-life cases, professionals can learn from others' experiences and figure out what led to certain outcomes. They can also find the best ways to do things or avoid mistakes. Case studies are used in many fields like business, healthcare, education, and social sciences to get better at solving problems and making decisions. They connect what we learn in theory to how things really happen in the world. Real-life case studies are valuable tools for learning and growing, and they help us understand the world better so we can make smarter choices. 10. Overcoming challenges. In position trading, where big rewards are possible, challenges also show up. It's like going on a roller coaster ride. The market can sometimes go down unexpectedly, testing your patience and confidence. But here's the important thing. Imagine being like an experienced captain, steering your ship through stormy waters, always looking ahead to long-term growth. Picture yourself as a strong tree, staying firm during storms but firmly rooted in the ground. The truth is, being resilient during tough times is crucial in position trading. It's like having a shield that protects you from getting too emotional about short-term problems, reminding you that your investments can grow over time. If you found this video helpful, don't forget to like, subscribe, and share it with fellow traders and investors. Thank you for joining us today, and happy trading. Until next time.